The United States says it will start reducing the pace of its massive bond buying program this month, introduced to counter the effects of the pandemic. With the economy recovering, the US Federal Reserve thinks it isn't needed anymore. But it now faces the delicate task of winding down its ultra-low policy rates.
The time for lifting rates and beginning to remove accommodation will depend on the path of the economy. We think we can be patient. If a response is called for, we will not hesitate.
Across the pond, the European Central Bank says it's very unlikely to raise interest rates next year. Inflation is growing on both sides of the Atlantic, but ECB President Christine Lagarde believes this is a temporary problem.
The first one is that inflation.
And according to some experts, Europe's cautiousness is because the economy is recovering more slowly than in the US.
We do expect the Federal Reserve in the US to increase interest rates over the course of the next year. For Europe, it looks like that might be somewhat too soon. We heard Christine Lagarde only yesterday say that she did not expect that economic conditions would be such that interest rates would be increased over the course of next year. And when the ECB comes out and says that so explicitly, then that is a good sign that indeed Europe will be somewhat later in terms of a first rate hike compared to the United States.
The ECB's COVID stimulus initiative, known as the Pandemic Emergency Purchase Programme, is due to end in March 2022. But for analysts, the big question now is whether some kind of bond buying scheme will continue throughout next year. Christopher Pitches, Euro News, Brussels.